Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to today's Bull versus Bear webinar. Steve Miley here on the call for Trade Day on Tuesday, the 17th of October. Welcome, everyone. Going to go for our usual regular run through in here today. We're going to take a look at the calendar, what we've had, what we've got coming up. We'll take a look at the macro fundamentals, the central bank events, the data events, the earnings calendar. We'll take a look at all of those geopolitical risks as well, all of those factors that are influencing financial markets right here, right now. And we'll also then take a quick look at the charts, how all those impacts are hitting the actual financial markets that you guys are trading, and where are the potential opportunities, where are maybe the trigger points on the charts that you're looking at today. Let's start off with a couple of announcements. First one is today. So not so much a Trader Mind session, but we have streaming. So we haven't done these actual Trader Mind sessions for a little while. But what we did do about a month or so ago in here, we did our Q&A. Okay. So go check out this section in here. I'll share it with you. So you go to where you are now, you're in here in the trading room. If you go across to resources and you see down here, Trader Mind sessions. Okay. So later on today, where are we? 1 second. Well, later on, I'm just going to share the link for you in the chat. So if you look in the chat, you'll see the link. And these two handsome devils here, this is James on the left and this is me on the right in here, Steve. We are going to be doing another one of our, here we go, these Q&A sessions. Now, these are streaming on Discord. It does say only on Discord, but it's also going to stream. I'm going to try to make sure. Now, ideally, guys, sign up for Discord. If you come across onto the left-hand side over here, you'll see the Discord tab. Okay, you can click on that. Okay, and you see in here, you get an invite, and then you can come in here, and then you can start up and join up. Okay, so that's already, because I'm already a member, it's already taken me straight through. But go and sign up to Discord, and you'll see it stream live in Discord. There are details in there. Okay, now this is happening. Now let me get this right. This is happening at 4 o'clock. Now this is UK time. 4 o'clock UK time. UK time at the moment is 1 hour ahead of GMT. And 4 o'clock UK time, if I want to translate that into US, it's going to be 11 a.m. Eastern and 10 a.m. Central. So 10 a.m. Central time, 11 a.m. Eastern time, which is 4 o'clock if you are in the UK, and UK currently is GMT +1, so it's going to be 3 o'clock GMT. That's right, I believe 3 o'clock GMT. UK is 4 o'clock at the moment because we're on British summertime still at the moment. So there you go. So and then we're going to have just a general Q&A with James and I. That will stream in here, the link that I've just sent you. But better to go if you can, guys, because technology being as it is, we're actually doing it directly into Discord, and I'm going to try and share it then into this page here, and it should live stream like you're seeing this being live streamed in the trading room at the moment. It'll be in here under resources, Trader Mind sessions. But better to go to Discord. Okay, go to Discord if you haven't already. Sign up in Discord, and you'll be able to go in there. But you'll be able to sign up as a member. And when you're signed up as a member, you'll be able to ask questions as well, okay, in the Q&A to James and I. And anything you want. You can talk to us about markets. You can talk to us about Trade Day. You can talk to us about the prop firm industry in general. You can talk to us about the evaluation challenges, how you're getting on, what happens when you're funded. Funded traders can ask questions, whatever. Okay, so come on and ask us. It's a general Q&A session. 4 o'clock UK time, so it's 5 o'clock if you're in Central European time. It's 3 o'clock if you're on GMT, 11 a.m. Eastern, 10 a.m. if you're Central, which I guess if I go all the way back, then I think that's 9 a.m. Mountain and 8 a.m. If you're Pacific time in the US. But I mean, I can't know every single time zone around the world, guys. That's not my special subject. Okay, that's the first thing to mention. The second thing to mention in here, guys, is tomorrow the webinar is going to be cancelled. So no webinar Wednesday. I'm going to put it in the chat. So no, this webinar that we're doing here today is the daily webinar, the Bull versus Bear webinar. No webinar Wednesday. So that is going to be cancelled, I'm afraid. I unfortunately have a funeral to go to, and James is not able to cover for me. And we like to keep them to ourselves in here, so people tend to like it when we do it. So we're going to cancel the webinar on Wednesday. No webinar on Wednesday, so don't come in here. I will put a note in the forums. There'll be a note in the forums in here. So remember where the forums are, guys. Do check out the forums. Just in case you don't know, if you're new to Trade Day, any kind of information we need to let you know, they're here in the forums. Okay, so again, this is under here, under resources tab, forums. Okay, so go in here and go under forums, and then you will see any announcement from Trade Day. So I'm going to post in here. I'll be posting that later today. I'll post about, actually I haven't posted about the Discord Q&A. I'll be posting that in here. We'll post that later today, and we'll also post in here regarding the tomorrow's cancellation of the webinar. So no webinar tomorrow. Okay, enough of the announcements. Let's get on with what's going on in the markets. I'll come back to the calendar shortly, but if we actually just for a little look back on the calendar, remember yesterday's calendar was very light on data, not much of real significance. We had Harker speaking yesterday. Most of the events, what I'm going to do is, rather than go to calendar, I'm going to jump to, this is a really good resource in here, 5 things to start your day. Now, if you haven't already in here, if you go to the Bloomberg homepage, so I'll go back to the Bloomberg homepage in here. Let me open it in a separate tab in here. I don't know if it's actually on the UK homepage. Let me just go to the Bloomberg homepage. We don't want Bloomberg.com UK. We just want Bloomberg.com. Will it allow me to go to Bloomberg.com? Yeah, I think we could. No, yeah, you can. Okay, so wherever you are in the world, you can go to bloomberg.com/ wherever it is. Here it's taking me to UK, right? But you don't have to go to the UK version. Just go to bloomberg.com, okay? And if you go to bloomberg.com, so let me just share that. If you are new to Trade Day now, most Bloomberg articles you have to pay for. So I put the website again in the chat. If you go down the right-hand side of Bloomberg, a lot of these, if you click through, now I've got a subscription, so I can look at these and I can share these with you guys. But if you come over here, look, daily newsletter, okay? And then you can sign up actually for, it's on the right-hand side over here. It says get John Septek's daily newsletter. Over here, if you're thinking Bloomberg.com, it won't allow me to just go into Bloomberg.com, not the UK version. So let me see if I can just do US. Maybe it would let me go to the US version. No, it won't allow me to go there. Okay, but if you go to Bloomberg.com, okay, on the right hand side here, you can sign up for 5 things to start your day. So this email that this article we're going to go through in here today, you can sign up for 5 things to start your day, and it'll come into your inbox, and it will be whatever time zone. You'll get a different one depending what time zone you're in. So the main news in here overnight, Biden is announced that he's going to travel to Israel to try to help out and to bring down the tensions in the Middle East due to the conflict that we have at the moment that's been going on for the last week or so in here, the upsetting scenes that we're seeing out of Israel and in Gaza and with the Palestinians. So all of this is very, we're not going to talk about, what's going on with the politics. It's all very upsetting though. And so Biden going to go over and actually ease some of the pressures maybe. So that's kind of seen as a slight positive, we would say, for markets. It's going to maybe hopefully ease the situation to some extent. Representative Jim McConnell closed Monday night to be lead the next US House Speaker. So a new House Speaker in here, it looks like, who is a hardline conservative. So that's what a development there. Not really that impactful for the financial markets. Volatile bonds. So we've been talking about bonds. If you've been coming on the webinar, I appreciate we have a lot of new people joined us in October. But if you have been coming on the webinar for the last few weeks and even the last month or so in here, I've been talking a lot about the bond markets. Now, a lot of you guys are trading. In fact, most of you guys trade the indices. Most of you are trading at the S&P and the NASDAQ, right? But the volatility and the movements we've seen in the Treasury bond market have really been the phrase that we have in the market is that the Treasury bonds have been the dog that are wagging the tail of the equity markets. So they are the leader in the price movement. So we're getting the moves and the prices in the bond markets and the moves to more recently through August, September and into October to higher yields in the US And then more recently, we had a move back down to lower yields as bonds went higher in price after the war broke out in the Middle East. And so we've gone a rush to flight to quality. We say flight to quality, a move to safe havens or bond prices go higher. But all of this volatility that we're seeing in here, and it's just pointing out in here, it's volatile out there in the long end treasury market, the highest levels of turbulence in the 30-year yields from the height of the pandemic. So treasury bonds, 30-year treasury bonds in here. I think I've already got this article somewhere in here. Yeah, long here. So I've already pulled this one out. Long end treasuries hit by wildest swings since the 2020 pandemic. So since the this is the most volatile markets have moved. The US 30-year moves averaged 30 basis points in the last 13 basis points. So this is the move in the yield, remember. 13 basis points swings on average in the last 5 sessions. And long dated yields, so long end yields are the highest levels or near their highest levels since 2007. And the movements we've seen in the bond markets are the most aggressive, the most volatile since COVID, okay, since the pandemic broke out. So that's significant, and we are keeping our eyes on those bond yields in here. They are important, and again, they are potentially going to be significant with regard to what happens in the equity market. So that's why we're keeping an eye on them. Markets are struggling for direction as investors wait for more data, but the dollar in here continuing to strengthen. Okay, higher yield moves have seen strengthening of the dollar. Why is the dollar strengthening? Well, it's a flight to quality. Again, right, flight to quality. Just like bonds have gone higher in price, lower in yield, we've seen the dollar started to strengthen again. This dollar's been strengthening a lot this year anyway, due to higher interest rates and the higher for longer mantra that we've had from the Fed in here over the past 1 to 2 months, and that higher for longer mantra from the Fed means higher US Treasury yields, higher US interest rates, higher US Treasury yields, and then that's beneficial. It's the dollar is seen as more attractive to own because interest rates are seen higher for longer, but then also it's been going higher more recently as a flight to quality. It's a safe haven as we go into the very indecisive and hesitant markets. When markets are indecisive and hesitant, the dollar often rallies. And obviously, when you have a war breaking out in the Middle East, that's why we're seeing this flight to quality. What have we got coming up today? Well, we're going to go through this anyway, but we've got Goldman Sachs, Bank of America, Johnson & Johnson. We'll talk all about that. Fed John Williams speaking in here. And also we've got Barkin speaking and Bowman speaking and Kashkari. So we've got a lot of Fed speakers. And we jump back in here to the calendar in here. First of all, we'll talk about, so yesterday there wasn't too much on the wires, but if we go into today, and we'll come back to what's already out in here this morning. So this is interesting in some of this that we've had up here already in here this morning. But if we go and take a look at what we've got coming up today, there we got. So Williams is speaking very shortly in about 15 minutes time. So 15 minutes time. The key data today on the macro data side, and this is actually the biggest data we've got for the week from the US. So in 46 minutes time, just coming up to 45 minutes time now, we have the US retail sales number. So keep your eye on that. It's important data, retail sales. How is the consumer reacting to the higher interest rates we've seen globally and from the US? How is the consumer reacting as we've seen a very slight loosening in the labor market? How is the consumer reacting to the fact that we've got global growth slowing down? Okay, so retail sales data coming out in 45 minutes. We also get Canadian CPI. We'll be keeping an eye on that going into today as well. And then a little later at 9:15 Eastern time, we have industrial and manufacturing production data out of the US. So that's going to be interesting to watch as well. As we said, we have all those Fed speakers. Now, as I mentioned to you guys in yesterday's webinar, we are about to enter. So this is one maybe for your bookmarks as well. In here, we are about to enter the Fed blackout period. Okay, so the next Fed meeting, here we can see the meeting is on Tuesday and Wednesday in November, the last day of October. So it starts on Halloween on the Tuesday, the 31st of October, and it concludes on the 1st of December. So you can see they're in red there. So that is the next Fed meeting. In the red boxes that are the meetings, okay? And we get the announcement on Wednesday, the 1st of November. But the blackout period, this is when the Fed speakers don't speak anymore. So we don't get any information from the Fed. You can see that is a week and a half before. So it's the week before, the half week before, the meeting, and then it's a full week. So it's actually this Saturday, the blackout period. So you can see on all of these, it's 1.5 weeks. It's basically 10/11 days before the meeting. Okay, so from this Friday is the last day that we can get any Fed speakers. So we do have quite a lot of Fed speakers in the calendar. They tend to then bunch up a little bit because they can't speak in these blackout periods. So we have quite a lot of Fed speakers coming through this week, and those are the last times we're going to hear the Fed speakers until the meeting. Okay, so that's important to monitor and to know. So if we go back to the calendar for today, we do get those Fed speakers coming through. As we said, we got Williams very shortly in 14 minutes. We get, and there was a host of others. Where are they? So we have Bowman speaking. We also get Barkin speaking, and it doesn't got Kashkari on it, but Neil Kashkari is also speaking later today. So we're watching out for all of those. So that's kind of fairly busy. Just going back to what we've seen this morning in here, we did get UK average earning data in here. So this is earnings data. So this can be potentially inflationary data in here, and you can see it's actually lower than expected. So that's a positive, right? We're seeing, and there's an article I have in here. So UK regular pay growth slows for first time in January. So this is a positive, right? Because obviously lower wage growth helps out with lower potential inflation. So we're looking for these, not just from the US, all of this data, but we are looking for these inflationary pressures to start to ease globally. Remember, all central banks have been increasing rates. That's why we're also going to keep our eyes on this CPI data. Okay, it's Canada. You may be not trading Canadian markets, but we're watching for global inflation data to start to moderate, to start to go lower. So we've already had a positive sign out of the UK this morning. Remember, one of the world's largest economies, top 5 economy in the world. And then we've got Canada coming up, CPI. Now, you may not think it's that important, but obviously Canada is one of the main, most of the Canadians' trade is done with the US. So what's happening in the US and Canada are kind of very much linked, okay, because you've got a huge amount of trade. I think so, like 80% of Canada's trade is done with the US. So it is very, very reactive to what's going on in the US. So we're going to be keeping an eye on that CPI data out of Canada as well. We have that in just over 40 minutes time, 42 minutes at the same time as we get the retail sales data. So a lot to be watching today. Let's go to the investing calendar. I'm going to share this with you. So remember, this one in here is actually within trade day. It's you can get this from the trading room. Okay, so where you are now, it's just to the right, I think, of where you're streaming, down to the right. I'm not going to go into the trading room. I go into the trading room, I'm going to hear myself speaking in the webinar that you're in, and we'll get a feedback loop. So you can access the calendar from the trading room. But there's also this calendar which we can't embed in trade day. We would love to be able to, but we can't. And this is the investing calendar. And the filter I do in here, if you don't know, so we'll go across on the filters, and you want to tick US, and you want to tick the 3 stars just to get the bigger companies, because we're only interested in the big companies and how they're going to potentially impact into the actual indices. Like, we're looking at the indices, and we've already had most of them. So you can see over here on the right hand column, it tells you if they're going to be before or after the market opens. Okay, so before the bell or after the bell. It's a little sun or a little moon, and you can see most of these are all suns, so all the bigger ones. And this is ordered, they're ordered each day by market cap, so the bigger companies at the top. So we've already had Johnson & Johnson, Bank of America, Lockheed Martin, Goldman Sachs. So these are the big ones in here. A lot of the big banks have now already reported. Okay, so we had some on Friday, and then a load more today. We do get some more tomorrow. Tomorrow we get Morgan Stanley as well tomorrow. So, but by tomorrow, a lot of the big financials would have reported. Okay, and then you can see in here it's pretty much a sea of green, right? Johnson & Johnson, and this is EPS, earnings per share, and revenue. And then we have the forecasts are in black. And then once they are out, it's whether they beat or miss. Okay, and you can see in here, green on Johnson & Johnson, green on Bank of America, green Lockheed Martin. Goldman Sachs missed, but it was only a very small miss, quite a fairly small miss on its EPS, but beat on revenues. Okay, and Bank of New York Mellon also beat green. So we've had very, very positive results so far out this morning. So that's all fairly positive, and they've got some stuff in here. I think in here Where are we? Long intros, but well, I've already spoken about that. I'll come to the article. Run through the article shortly, but there's an article talking about that. Going into tomorrow, we've got very little after the bell. Omnicom after the bell. Tomorrow's a big day. It's after the bell though tomorrow. I'm not going to be on tomorrow, so I'll run through these now. Because we don't have the webinar tomorrow. Tomorrow's a big day. We have Tesla and Netflix, okay, tomorrow there after the bell. But before the bell, we do get ASML. So the chip maker, that's going to be a big one. Procter & Gamble as well. And Morgan Stanley as well. That's before the bell. So ASML really the big one before the bell, but also Morgan Stanley, Procter & Gamble. After the bell tomorrow night, Tesla and Netflix. So we're watching out for all of these. Make sure you're watching those for tomorrow. I'll just actually quickly do a look at the calendar for tomorrow. The main focus overnight from tomorrow, we're going to get inflation data in here from the UK and from Europe. Going into the US session, though, we've had the main data. We're going to have the main data today. The big data for the week is US retail sales. You can see that none of this data particularly big. They've got building permits, crude oil inventories. These don't usually impact the market too much unless you're trading oil, that is. And then we have more Fed speakers, you can see later in the day. But it's a fairly quiet calendar out of the US tomorrow. The big data tomorrow is in Europe, UK, and the Eurozone data for inflation data. We certainly should be watching these as well. They could have an impact on market. If you're trading through the European session, these could impact into European stock indices and then in turn knock on into US stock indices. So we're watching out for these tomorrow, okay, just to give you a heads up because there's no webinar tomorrow. Right, let's run through the articles. We've already looked at 5 things to start your day. We've already mentioned in here the stocks. So here's just a little recap for today. Stocks and bonds slip before Biden's interest. So no real reason in here. Stocks and bonds having had a fairly positive day yesterday, slightly back lower in here today. Bank of America gains in pre-market. So we said about the beating estimates, and not just those beating estimates, but the other reporters so far today beating estimates. And banks Biden visit boys market. So this is saying it's more positive. Markets are not particularly down in here today. So banks are positive, and Biden's visit is being taken as a positive for markets. We've already spoken about UK, the UK wage data, earnings data, and this was from actually yesterday. German wholesale prices fall for 6 months in a row. So falling wholesale prices, a positive obviously for inflation. This was from yesterday though. US stocks are ripe for earnings-led rally as rate angst settles. So this is just an opinion in here. S&P 500 valuations back near long-term average. So S&P, they're saying that S&P are at their long-term average. So potentially a positive if we get a positive earnings season. A lot of the concerns around higher rates have already been priced into the market. Okay, so options market shows traders don't see earnings as risk events. So earnings are not being seen as a negative in here. Oil steady in here overnight. WTI holding above $86 a barrel as Biden commits to Israel trip. We spoke about Bank of America estimates on trading and net interest income game. So that was a positive as well in here. This is something I've been talking about for months and months and months about the potential slowdown in China and how that's had a bigger impact on global markets in here. Part of the slowdown in China has been driven certainly by the concerns around the property market, particularly the commercial property market. We have a couple of key events coming up in the next couple of weeks. So this is bigger picture. Country Garden and Evergrande in here. Property companies in China in here have got a couple of important events. So Country Garden on the brink of a dollar bond default, and Evergrande is facing a court hearing as well going into the end of the month. So these are kind of looking a bit further out, some potential negatives, or they could be positives for the Chinese commercial property market, and that Chinese property market is very significant for the Chinese economy and in turn then for the global economy. Bank of America poll. So this is the monthly investors poll. Used to be Merrill Lynch. When I was at Merrill Lynch many years ago, this was one of our star products in here, the Merrill Lynch investor survey. Okay, it's now the Bank of America investor survey run by Michael Hartnett now these days. Michael's mentioned in there. It's an old friend of mine from the markets when we were at Bank of America together. But basically saying that bearish investors flock to cash, shower an economy. So strong cash levels. This can often be a kind of contrary indicator. When so many investors are in cash, okay, they're bearish and in cash, that is often the sign then that the market's about to turn the other way, okay? Because there's a big stockpile of cash. It means, oh, there's Michael there, Michael Hartnett, right? There's a big stockpile in cash. Cash levels as a percentage of asset management have climbed above 5%, okay? So that means asset managers are holding a lot of cash. They're not investing in stocks. So that means there's a what we call a wall of money potentially be ready to put to work. So if we have a positive earnings season, so far the earnings season has started quite well, we could see a bigger rally in stocks. So this is bigger picture looking at markets, but nevertheless, I think it's important to know this and understand this. A quick nod to the, again, if you've got people new who don't see me posting this stuff in here, here's the CME Fed tool. I often come and look at this, every few days. So this is continuing to creep up. So this is based on the 30-day Feds Fund future. So this is the interest rate market based on the futures markets. Okay, what are they pricing in for the next meetings? And you click on each of these tabs. Each of these tabs at the top is a meeting date, a Fed meeting. Okay, so the next meeting is the 1st of November. The market is pricing in here 90%. This has been slow. You see, it was 93% there, so it's actually dipped a little bit since we've been on. But this has been creeping up and has stayed above 90% in here for some time now. This is basically saying that the expectation from the market is for after the November meeting for rates to be at 525 to 550 zone. That's where they currently are. So this is pricing a 90% chance that rates remain unchanged. If we go to the end of the year in here, this has actually dipped a bit low. This was up to closer to 70%. So it has just dipped a little bit in here. But again, this is saying nearly 70%, so a 67% chance that rates are unchanged, okay, 525 to 550. Only a 33% chance that we have higher rates by the end of the year. Remember, the Fed are telling us they were, the last set of the last meeting on the dot plot chart, the Fed were voting that they were going to hike. That's what they were telling us. There would be a hike before the end of the year. But the market kind of doesn't quite believe the Fed in here. A quick look at where we are on the overnight rates and overnights in here. So Nikkei and Hang Seng were both up in here overnight. If we take a look at the European indices, slightly better overnight, playing catch up with the positives that we saw in the US yesterday. And then in here, yesterday was obviously a positive day, up about 1% on the US indices. Slightly lower in here this morning, but it's not much, right? We've had a slight dip in here this morning. Let's go. And I just want to highlight, actually, no, I won't do that. I will do that next time. But just a quick look at the charts in here, and it will be a quick look at the charts. I'm very conscious of time in here. So if we go and take a look at the ES, okay, really strong day, back up to the towards the recent highs. Yes, we've had a dip lower in here. The market's kind of been flirting with this 13-period EMA. This is on the daily chart. But this underlying tone for me is positive again. Strong rebound yesterday. Yes, we've had a slight dip. And if we go into the 30-minute chart on the ES in here, slight dip in here this morning. We're kind of holding this spike in here from, I think that was overnight. So that spike low, 43.97, trying to hold above there. And then looking for further upside in here today. Taking a look at the NASDAQ in here, really strong day. It was an inside day though yesterday, but a really strong day. Again, look, went down to on a Friday, flirted with this 13-period EMA. Okay, works usually very well when the market's trending, and there's rebounded from that. It was an inside day yesterday though, so not as positive as on the S&P. Dipping back low in here this morning, going on to the 30-minute in here. Again, we had this spike down in here, which was down to 15,212. So while holding 15,212, I'm looking for this to re-energize back on the upside. So looking for positives to come back through on those. Any questions? Just a reminder, if you want to type a question, just a reminder in here today, guys, in here, we do have that Q&A. So it's 4 o'clock UK, 11 o'clock Eastern time, and 10 o'clock Central time. If you're in Europe, it's 5 o'clock Central European time. Okay, we have that in Discord. You can go and watch it in the Trader Mind area, which I shared the link right at the beginning of this webinar. If you want to go and look at it from there, I would suggest you go and join the Discord. Okay, click on through on the Discord and then join the Discord, and then you can watch it live in there, because I'm not 100% sure. We're gonna, hopefully the technology will be okay. Shouldn't be a problem, but who knows, because we're streaming it live in Discord and then recording that to stream it into the Trader Mind area on the website. No questions coming through. I'm going to wrap us up there. Again, another reminder, no webinar tomorrow. No webinar on Wednesday. I'll be back with you on Thursday, not till Thursday. The Bull versus Bear webinar, back with you on Thursday with me, Steve Miley. Have a great trading day, everyone. Bye.